Hey everybody, this is Jim at SP500chart.com. It is tax day, April 15th, 2013 at 4:15 p.m. here just north of Atlanta on the east coast of the United States. We're going to take a look at the S&P 500 chart and some other things today as well. We're going to look at the Russell. We're going to look at the Dow Jones Transportation Index. We're going to look at the Dow Jones 30, and we're going to look at the NASDAQ. Try to make some sense of this to get a feel on, is this going to bounce here, or are we starting to see things break down? Before we take a look, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, here is the chart that probably is the best description of what we are looking at that I can find. Now, I want to remind you that as we look at this lower yellow line, in the first three instances where we had a significant sell-off, they do not line up. So I am starting back here at this bottom, crossing this low in late December, not worrying so much about what took place in late February. Then I'm hitting the next low in the first week of April. And then that lines us up exactly with where the S&P closed today. So it's kind of like you can't make this stuff up. Isn't it funny how often the indexes, and the S&P in particular, because that's what I spend a lot of time following. Isn't it funny how often we stop right on either resistance or support, as if we're being teased? Is it going to bounce, or is it going to crash through? And the fact of the matter is, we don't know. I suspect we will take this line out. But that's just me guessing. And the only reason I'm guessing is because it's about time we do that. And with the kind of swift downward momentum that we saw in the markets today, seems like this is as good a time as any. So let's take a look at things on a little bit closer level on the S&P. If you want to, excuse me, if you want to look for a possible reason to think we could bounce here, it would be the fact that that it looked like we were in a little descending channel, similar to what we were in back in early April. But the bottom just fell out even of this descending channel. And you know, I'm not going to quiz you, but you know that means that it would be easy for the S&P to get back on top of this line right here. It just wouldn't be that hard to do. But look at that. What a swift downward day. And the funny thing was that in the weekend update, all I said was that I didn't know if we were going to bounce here and head back up for another test of these levels, or if what was in between these two little lines here that I'm going to turn dark blue. I said it could be that these two little lines act as a bear wedge. But here's the deal. This is not a bear wedge until this bottom line is broken. And then once it broke, we then were on the lookout that, yep, this is going to go down. And it was funny because we spent about a third of the day bouncing on this lower line from our kind of a rising wedge channel thing. It's the only thing I can call it, really. Here it is in a little bit more in a little bit better view. So we have this rising wedge, and we bounced along that bottom line for a bit and then just came crashing through it. Crashing through this potential channel as well. So it's not really a channel because it did not act as a channel, but it sure looked like it at one point today, and that's when I drew this line. When I saw the little bouncing around here early in the day, I took this top line and just made a parallel copy of it, stuck it right here, and I said, well, maybe we're going to bounce here. Not to be. Today was a little bit of panic selling, and it would not surprise me to see this continue and take us back down to the 1540 level again. That just doesn't seem to be at all out of the question. And if we do that, I would start to be on the lookout for a bounce and then possibly a back test on this yellow line. And friends, what would that make this entire thing right here that started in early March? We would have a double left shoulder, a head, and then a potential right shoulder. I'm just thinking ahead, and I'm maybe too far ahead, but that is certainly a possibility if we keep selling off at any appreciable rate. But I would look, and I would expect a bounce again at 1540. And if you're adventurous and you think we've topped out here at 1596, then you might want to start short positions on a break of this yellow line and a back test. That would be, I think, a pretty good move. Then if this line broke, what would we be in store for? Well, if this does turn out to be an inverted head and shoulders, then we're looking, not an inverted, but a regular head and shoulders top, then we would be looking for an eventual move down to about 1480 something, where if we bounce, we could see we may even be making a larger pattern. So this is all very interesting, and what a day. Let's take a look at some other things real quick. Here's your NASDAQ. Basically, we were looking at this line here, which broke a little bit more than a week ago, but recovered, got back up to this trend line right here, which is analogous to a similar trend line we have drawn in the S&P chart. Today, this rising support line broke again. So at this point, I would expect more weakness out of the NASDAQ, especially on that second break. We kind of gapped down here, and I believe the impetus to maybe buy back and to get back into that gap. Then we had a little bit of that exuberance taking place in the S&P. And what's interesting here is that these charts aren't all lining up. This line is a line that correlates to the line that the S&P is currently resting on. So in other words, these two bottoms right here and this relate to the S&P's support line. The S&P never broke the first time, and it hasn't broken yet the second time. But the NASDAQ did break and broke again today. And just something tells me that that second break should tell us this line is now to be considered significant resistance. Okay? Here's your Dow Jones transportation average. And boy, look at this. We mentioned a while back that we had a little head and shoulders top that came down, made its minimum target. And now we are looking at a potential larger head and shoulders top. And I mentioned this before, that if this one pans out and if we break this neckline right here, then wherever that might happen, we are looking at an expected move to roughly 5,500 in the Dow Jones Transportation Average. Dow Jones Industrials, pretty analogous to the S&P. We really ended the day, just like the S&P, right at significant, well, I don't want to say support, because I'm not holding my breath that this line is going to hold. And I'll keep you apprised of the potential in the Dow Industrials for a head and shoulders top as well. The neckline would be just a little bit under 14,500. Okay, let's look at something else. Here's the Russell 2000, and this is really was really ugly today. It's not a real picture perfect thing going on here, but I think the Russell is in deep weeds, because not only has this trend line broken, then back tested. If we look at the last two significant lows of 2013, as well as the area where we started out in 2013, it almost looks like the Russell is sort of in a head and shoulders pattern here with a very short right shoulder. And if that's the case, and this pans out as such, then we would be looking for the Russell to come back down and test the 860s to low 870s. So that would, that's not hugely under where we are, but that's another probably 5 or 6% in the Russell. So let's go back, take one more quick look at the S&P to recap. Okay, to recap, here's our chart. Here's our yellow line right here. Any more weakness tomorrow, and I think it's a slam dunk to go back and retest 1540. At that point, I would expect a rally, but I would expect the rally to not overcome this yellow line. It could possibly, kind of hug it like like we saw back here, where we just kind of melt up for a little bit. I can't tell you what to expect, but I can tell you that if we come down to 1540, bounce here, have a decent rally over here going into the beginning of May, then it looks like our little sell in May and go away may come true for the fourth time in a row. So guys, that's your video for April 15th, 2013. I would just say exercise caution. Oh, by the way, I was prior to the big swoon in gold, I was stopped out of a trade, thankfully, for a 1.5% loss. So don't be afraid of stops in the indexes and in the ETFs. Those things can't be manipulated like thinly traded Chinese mining stocks and stuff like that. So be careful. And thanks for watching. Take care. And by the way, if you were wishing that you had seen this video, maybe you're not seeing this until the weekend of the 20th, April 20th, you could have seen this video at about 5 o'clock on Monday afternoon, April 15th. Subscribers get the videos released to them Monday, Tuesday, Wednesday, and Thursday immediately after they are completed. And I am batting probably close to 980 on getting the video out each day after the close, with rare exception and only when there's a serious technical issue or when something has come up that I have no control over. So guys, thanks for watching. Take care. Visit sp500chart.com and consider supporting this effort with your subscription.